Hey, if you follow the stock market, you know that last week was a really rough week in the stock market. There's a lot of stocks going down, some of them quite large. And so if you've been playing in the market, if you've been long, if you've been bullish, whether that's stocks or bullish option trades, last week wasn't fun. And for me included, okay, I'm a long-term bull. I want to see the market go up. And last week was rough. But you know what? It's going to make for great opportunities to get long for the long run. You want to be bullish. If you want to make money in the long run, you got to be bullish because the stock market goes up over time. So you have to take these opportunities on the pullbacks to get long again. I know that can be scary. I know you might think it's the end of the world and you think, well, what if I buy and things keep going down? Those are all the risks that you take with investing. But if you look at the long-term charts, you will see that the market goes up over time. Sure, if you buy now, the market could keep going down or the stock could keep going down. That's just part of it. But you have to know that you're in for the long haul and you have to be able to take a little heat every once in a while. But it pays off in the long run. So what we're going to do here, we're going to look at the charts. I'm going to show you what I'm seeing. I'm going to look at what happened last week. And we're going to get ready for next week because we got to put in the work and get ready for next week. Because if you're an options trader, that you know that the direction of the stock is paramount. And the direction of the stock will ultimately decide whether you're going to have a winning trade or a losing trade. So we want to make sure we look at the charts and figure out when it's time to get in and or get out. All right, so let's just jump right in, start looking at charts. Everyone, Lee Lowell here from smartoptionseller.com, and we do these, or I do these chart reading videos free for the trading community because I want to help everyone become a better trader, whether you're trading stocks or options. So what I do here is it's all about the charts. We look at the charts. We got to see what's happening because if you want to be a profitable trader, you got to know which way the stocks are moving. So we always look every week. We start with the chart of the SPY, which is the exchange traded fund for the S&P 500. It's the broadest measure of the market as a whole. So we want to see how the index is moving because that will lead everything else. All right. So what you're seeing in front of you for those that are new, up here is the price action. This is the chart that I use. Very simple. Price action is up here. I have three indicators. I have a 20-day, 50-day, and 200-day, all simple moving averages. And these other blue lines are the channels that I've hand-drawn. It tells you which way the stock is trending, the stock or market. You always want to know which way the stock or market is trending. And down here, we use the RSI indicator. It's an overbought, oversold oscillator. It oscillates between overbought and oversold. And we use the 80 level and 20 level as our parameters to help us decide, when a stock or index may be getting overbought or oversold. It helps us a little bit more with our timing pattern to decide when to get in or out of a trade. All right, so we want to see what's been happening. Obviously, this is about a 2-year look back on all the charts we're going to look at. It's about a 2-year look back period. Okay. So basically since last October, 2023, the market has been in this nice, beautiful uptrend. Perfect. We can see we drew the channel here, these blue lines. Obviously the last 2 weeks, the market has been caught in this downtrend. Right about since the beginning of April, we've hit the down move. So we can draw a pretty steep new channel here. And, this tells us which way the market is currently trending. It's trending down. It has fallen below the 20-day moving average. Here's the 20-day moving average, fallen below the 50-day moving average. And here's the 200-day moving average lurking down below. So what do we want to do? What are we seeing? What's going to happen? And the RSI is certainly got hit really hard, getting closer to oversold levels, but not completely oversold. So what do we see happening for the market coming next week? Well, probably going to have a little more selling, at least to start, because that's the way the market is moving now. A lot of people started getting out. We're going to look at some of these individual stocks too, and you're going to see how some of these bigger NASDAQ stocks, some of these tech stocks got hit pretty bad. So for right now, the mood of the market is on the bearish side. Okay, selling has taken over for the last month or so, last couple weeks. And right now, that's in control. The bears are in control. When will the market start to go up again? It will start to go up again. We just have to wait for that time to occur. Doesn't mean that this is the end of the world. Doesn't mean that this is the end of the market as we know it. It is just one of a normal pullback that we will see from time to time. The market went up strong since last October without really any kind of major pullback. This is healthy for the market. You need to have pullbacks every once in a while to take the froth out, to reset things, to let new players get into the game, let the people take some of their profits, and then we can start the uptrend again. Why do I think the market's going to keep going up? Because the market is made up of companies that are profitable, and they keep pumping out products that people buy, and with all that money the companies are making, their earnings are going up quarter after quarter. So the stock chart eventually has to go back up again based on the fundamentals. Now, selling like this, sure, this could happen on short-term basis. Big money's pushing it around, taking some profits, just selling some things that may have got a little overbought. And when we get back to a little bit more normal levels, then the stock market will go up again. We just have to wait for that to happen. So right now we're in this downtrend, and we're going to wait for some sideways action, some support come in here. We're going to wait, and then we're going to wait until we see the market move back up again. And that is for those of us who want to be on the bullish side, okay? If you're a bear and you want to keep playing the downside, then keep playing the downside until it doesn't work anymore. We need to tread lightly here as bulls and wait until we see the market start to turn up again. And when will that happen? Well, we'll start to see the RSI get really overbought, or maybe a little more oversold, a little more oversold, and we'll wait to see it start to curl back up and turn back up, and we'll wait to see the price action start to turn back up as well. We have bullish positions in our newsletters, so we have to take some heat as well. But we have contingency plans in place, risk management plans in place. We never want to have an unlimited risk profile, which we don't. So we're okay there, and we play with out of the money option contracts, which gives us a lot of cushion for some of these adverse moves. All right, so this is the S&P 500, currently in a pretty big downtrend. Probably a little more selling will come in. Where do we see some support potentially? Well, this 480 level on the SPY was a big area of resistance prior, right around here, high 470s, right around 480. So that's probably the next area of potential support. We're just going to put a line here. We're going to use this for the next few weeks when we come back to the charts and see what happens, and see if the 480 level will act as support here and hold the market if it starts to come down here, okay? So right now the market's pretty bearish, but could be getting to some extremes, okay? So that means eventually, maybe pretty soon, the market will find a bottom and start to go back up again. But for right now, we have to contend with some more bearishness. Let's look at the NASDAQ. We look at the triple Qs, the ETF for that. Here's a symbol up here in the top left. If you don't know what the symbol is, triple Qs, QQQ. Also, some good selling coming in there below the 20-day and 50-day. Here's the 200-day. This one's still upsloping. So on a longer-term basis, the uptrend is intact. If you look at the longer-term uptrend, it's still intact. We're just having a little bit of a sell-off. Just kind of like we had the sell-off here, all right? Sell-off here. We're having a little bit of a sell-up. Does not mean the end of the world. We just have to wait a little bit until the market starts to turn around, okay? RSI is getting, somewhat into oversold levels. So I'd probably say within the next week or so, we may see some support or some consolidation starting to happen. All right, but for right now, we've got some bears out there. Now, the Dow was actually a bit stronger. The Dow was up on Friday. The NASDAQ and the S&P 500 were down a decent amount, but the Dow Industrials were up. This is the DIA, the diamonds as they're called, the ETF. So you can see we had some sideways action for most of the week right here. This whole section right here was all of last week, sideways action where the S&P 500 and the NASDAQ were going lower. And I think that's because the Dow had a pretty much of a head start on the downside. So the last couple weeks, the Dow was going down where the S&P 500 and NASDAQ weren't. And now that kind of flipped this past week, okay? So you can see how the RSI kind of turned up here down at the bottom. So maybe the Dow sort of found its bottom here, and the S&P 500 and NASDAQ are soon to follow. We just have to wait and see. But you have to look at the trends. You have to see which way the market's trending. If the market's going down and you want to take bullish positions, hold off a little bit. Maybe you could, dip your toes in a little bit if you're really itching to buy some shares of a stock that now you're getting the opportunity to buy. Maybe you buy a few shares. You just want to wait to see, because if the market comes off more, you'll be able to buy more shares at an even cheaper level. Okay, so use these pullbacks as opportunities to get long on the stocks that you may have wanted before, or you've been waiting to see a pullback. Okay, so there's the three indexes. The Dow's a little bit stronger here, had an up, and on a good note on Friday, where the S&P 500 and the NASDAQ got hit pretty hard. Let's look at some of these individual stocks. Let's start with SMCI first, because that was the biggest mover. That was down over $200 a share. Look at this big bar right here, okay? So this is 1 day's worth of trading. This is a huge bar. From top to bottom, let's see, from high to low, let's see what that spanned. The high was 890 and the low was 710. So that spanned about $180 from top to bottom, but from the close of the day prior on Thursday, it closed $214 lower. That was a big move. Now, we had drawn the congestion pattern here on SMCI, which typically means it's going to blast out one way or the other, and it seemed like it found it to the downside. Getting, so look how overbought it got on the RSI, but that was here, and it kept moving higher. So the RSI doesn't mean that the price action is going to turn right then and there. It just means that this is getting overheated for right now. Just keep an eye on it. And it continued to go higher and now it's finally fallen. So the RSI is certainly coming down here. But this got hit pretty hard. I get a lot of emails from people saying, they were bulls on SMCI. They bought the stock. They bought call options. It was a rough week. So you got to be careful on these really expensive stocks. So SMCI for now, there will probably be some residual selling because so many people were selling on Friday. It may have a little more selling to contend with before we start to see some consolidation, sideways action before it starts to move up again. This is just the hazards of the market, hazards of playing these really expensive stocks. NVIDIA was another stock, a darling of the market. It just got hit really hard on Friday. It lost about $85 a share from Thursday's close. This was a big move for NVIDIA. Here was that other prior support right here. Hadn't fully extended the line, but you can see if you extend the line here from this blue line here, extend it out, you can see that NVIDIA would have, just blasted down right through it. So probably a little more selling to come in on NVIDIA. RSI is not completely oversold yet. So we have position in NVIDIA, bullish position. We sold put option credit spread. So we have to take a look at that and see what's going on with NVIDIA, see if we need to take action on that trade. What else? Other big stocks we can look at. Netflix had great earnings after the bell on Thursday afternoon, had great numbers, but it just got hit. Couldn't hold up. It gapped lower. By that, I mean, here was Thursday's close, here was Friday. So you have this air pocket right here, this gap. That's what's called a gap, where from one day's close to the next day's open, it opens a lot further away from where it closed the night before. So you have this gap. So Netflix has this nice gap now. Look how the RSI took a pretty big hit. So it'll probably find some support. Okay, it had great numbers. It's a great company putting out great numbers. People just opted to sell. So there will be some support coming in. They'll have to get some sideways action, probably sell off a little bit more to get the late comers to the sell-off. They have to get out too. So we'll probably see a little more selling, and then that support sideways action will finally come in, and that'll turn around and go higher. These are the things that you have to deal with. If you're in for the long run, you got to deal with the ups and downs over time. But if you're playing with a great stock or a great company or a company that is good for you to hold for the long run, it will reward you. Okay, look what Netflix has done since May of 2022. as it was trading around $175 a share and went all the way up to, $640 a share. So it rewards you over time. You just have to deal with the pullbacks. You see this pullback here, but then it went up. You got the pullback here, pullback here, pullback here. You have to have the nerve to hold through thick and thin if you believe in the company. Okay, that's people who are playing very short-term options. As I said, I get emails all the time. People try to pick the direction by playing either 0 days to expiration options or 1 week options. It's really hard to make money consistently when you're trading such short-term expirations, because one day like this is going to ruin your whole week and you're going to lose your investment. Playing short-dated options is really, really, really hard if you're a buyer of those options. If you're a seller of options, short-dated options, it can be a little bit easier, but even still, if the market makes a big move against you, depending on which strike you're playing with, it could hurt as well. So Netflix, we know it's a good company, getting hit. If you're a long-term bull on Netflix, then maybe you could look at this as a buying opportunity. Let's look at Amazon. Amazon was doing great. Okay, doing great. I love the chart of Amazon, been talking about that, but it just got caught up in the selling and it's just trading a little bit below the 50-day moving average. So these are strong stocks, just got caught up in the selling. They will eventually turn around and go higher again. Same thing with, let's look at AMD first, actually. This one's gotten hit pretty hard. We've been talking about AMD and it fell through the support level this past week, getting very close to the 200-day upsloping moving average. It was trading around $230, almost $230. Now it's all the way down to $147. Okay, that's a $90 move. $90 move. That's a big move. RSI's getting down into, almost oversold areas. If you want to be long on AMD for the long run, you have to start looking at these really big pullbacks as buying opportunities versus, oh my gosh, the company's going to go bankrupt, I better sell all my shares now. If you believe in the company and you know that AMD is a good player in its sector, you have to look at these pullbacks as buying opportunities. Even if you've been long at times, you're gonna take some heat every once in a while. But that's the risks in investing. You want to hold for the long run. Look how AMD's been rewarding people who have gotten long over the last year and a half. Now you have to just play with the pullbacks. You can always make sure you have a stop loss in if you want. Whenever a stock makes a high and has a pullback, then you decide, well, I'm going to get out to preserve my profits. You can either buy put option or you can put a stop loss in, maybe 10 or 20% below where the high was made. You have these risk maneuvers at your disposal. Use them if you want. Otherwise, you just hold or buy some more and hold for the long run again. That's just how it works. So that's AMD. Let's look at Microsoft, because the Microsoft chart for me was a really, really good bullish chart and been talking about it for the last few weeks. Just had this nice, beautiful uptrend, but it got hit with selling this past week, just like every other big NASDAQ stock. What can you do? That's what happens. Once things start to go, every stock gets hit. Does that mean there's something wrong with Microsoft? Absolutely not. It doesn't mean there's something wrong. It just means that there's a lot more selling coming in. People are taking profits. That's all. You got to contend with the pullbacks. Pull back here, pull back here, pull back here. But if you give it enough time, a great company's chart will turn around and start to move higher. I know 3 to 6 months from now, when we're out here, we're going to look at this pullback and say, geez, that was such a little pullback. When the stock, when we see Microsoft up at $500 a share, you're going to say, gosh, I wish I had bought here when Lee told me to buy, or Lee told me to think about buying. No financial advice here. I'm just giving my opinions, but I'm telling you, look at these pullbacks prior and see that they ended up being good buying opportunities. So you cannot be afraid. If you're going to be in for the long run, you're going to be in for the long haul. With these great companies, you have to know that these pullbacks end up being great buying opportunities instead of, oh my gosh, I got to get out because everything's going to crap. this is how I see it. This is how it is. You have to decide for yourself, is it a buying opportunity or should I get out and sell everything? Because if you get out and sell everything and the stock starts to move higher, you're going to miss out and you're going to start kicking yourself for not staying in. Yes, it hurts when things are coming off and you're seeing your portfolio value go down. We all are part of that. I'm part of that. My portfolio value is going down too. But as long as I know that I have quality companies in the portfolio and I know they will pay off in the long run, sometimes you just have to grin and bear it. And sometimes you have to just get through it and wait for that next upturn to start. Okay? That's how things work. Let's look at some other stocks to see what's happening, if there's really anything of note. Okay, let's look at Apple. Apple, here's that long-term support right around 170 that we drew, fallen below 170. So Apple's clearly, in this bearish channel, and there's probably a little bit more selling to come in on Apple before we start to see that sideways bottoming action. Apple's been caught up in this downtrend. It's been a softer stock than some of the others. We saw Microsoft's been going up, Amazon's been going up, but Apple's been going down. Same with AMD, been going down. So certain stocks are going up and certain stocks are going down. That's just how it is. Apple's been a weak one for a while now. So probably a little bit more selling, and hopefully that sideways action starts to kick in on Apple. Tesla. Yep, we got to talk about Tesla. Tesla, here's the channel. Here is the long-term support. It got through it. So Tesla probably has got some more selling coming in. RSI is not completely oversold yet. So Tesla, what we want to see is that real big flush. Okay, you've probably seen this before. You get that one big flush to the downside, whether it's in all the stocks or the market in general. Get that big flush to just clear everybody out, and then that's when the buying starts to happen. I think pretty soon Tesla's going to get that flush to the downside, just kick everybody out. The long-term support is right around $100, which it hit back in early 2023. I don't know if it'll drop all the way down to 100, but we could get that one more flush down, maybe into the 120s, 130 area maybe, before the buyers step in and say, this is just too much of a good buying opportunity. So look for that. But Tesla right now broke through this major support this week, may have that more selling to go. Let's take a look at some other stocks. Anything of note? We looked at Amazon, Netflix. Let's take a look at Google real quick. Look at Google, still in this nice uptrend. Didn't really get hit that hard this week. So Google is a very strong stock. When everything else was getting hit really hard and Google stayed up like this, especially for these tech stocks, that means it's a really, really strong stock. So Google hanging in there pretty good. Most of the Dow industrial stocks were going up, as we know, but it was the tech stocks that got hit pretty hard. Costco, trying to hang on there, got the 700 level as, trying to hold support. McDonald's, nothing going on there. Pepsi, looking pretty good. We've been talking about Pepsi's been in this sideways action for a long time, but look at this nice move it had this past week. So the Dow industrial stocks doing pretty good, but Pepsi's sort of still in this range. We want to talk about Warren Buffett. Got hit a little bit too, but was up over $5 a share on Friday, bucking the trend, but it had been coming down. If there's one person you want to piggyback off of, it's Warren Buffett. Okay, greatest investor of all time. Even his portfolio goes down, his value goes down when the market gets hit like that. But it's just a matter of time before it's going to start going back up. Let's go to our website real quick because I want to show you a couple things. One of the things dealing with Warren Buffett. Here on our website, we're big put sellers. Selling put options is our bread and butter. If you don't know anything about selling put options, go to our website, get our free Put Selling Basics ebook. Right here's the header on our website, smartoptionseller.com. Click on this and you can scroll down and put your name and email address in here. We'll send you an email with a link for the free copy, okay? You go to our services tab right here. We've got our newsletters. We have our coaching sessions. We have our 5-part put selling video series. If you want to get a deeper dive into what put selling is all about, consider our 5-part video series. And if you want to know a little bit more about a strategy that you can use to take advantage of and piggyback off of Warren Buffett, take a look at this report that I wrote. It's under the services tab under shop, and click on that. All right, so that's what we got going on here at our website. Let's see if there's any other stocks worthy of note. We looked at most of the biggies. Oh, Meta also. Meta has had a great chart too. It's going up nicely. Got hit just like everything else, but it's still holding up pretty good. RSI's right in the middle, so it's not really overbought or oversold. Meta is hanging in there. There's really nothing else that I really want to talk about here. Coca-Cola hanging in there, had a good week. Actually went up all of last week. So these Dow stocks, the Dow industrial stocks, did pretty good. I think that's it for now. All right. So that's it. You know, if you want to look at the charts and you want to have better trades, you have to do your technical analysis. You have to put in the work and check the charts and get ready for next week. The market had a bad week. Okay. There's probably going to be some residual selling. We got to just deal with it and get ready for the next upside. Always look at these pullbacks as buying opportunities, because in the long run, let's pull up the long-term chart. We'll do the long-term chart of the Dow Industrials. We'll look at the monthly chart. There you go. This is why you want to be long and get in on the pullback for buying opportunities, because this is what's going to happen to your equity curve over the long run if you stick it out. Okay? All right. I hope this has been helpful. Give me a thumbs up, give me a comment, give me a like. I make these free videos for the trading community. We all want to help each other out. I'm going to put another video up on the screen here, one about put selling, so you can, see what we do, learn more about put selling. And that's it. All right. I hope everyone has a great trading week. This is Lee Lowell signing off.